the budget takes the lead once again to ramp up the virtuous cycle of investment and job creation. Honorable Speaker, sir, the capital investment outlay is being increased steeply for the third year in a row by 33% to 10 lakh crores, which would be which would be 3.3% of GDP. This will almost be 3 times the outlay made in 2019-20.
That was Finance Minister Nirmala Sitharaman delivering on a key India Inc. expectation in her 2023 Union Budget speech on the 1st of February. The centre continued its focus on capital expenditure, increasing it to 10 trillion rupees for FY24. This is a steep increase compared to FY23's outlay. It will include the continuation of 50-year interest-free loans to states for their capex needs, and that support has been increased by 30,000 crore rupees to 1.3 trillion. Experts say the baton has now been passed to the private sector to crowd in its share of investments, which has been missing so far.
If you really look at investment and growth in investment demand, just fantastic to see that the capex focus that the finance minister has kept going is just tremendous, because while there was some apprehension whether the government would continue with the focus on capex, I think they have really focused on it, which will, and not only from the centre, encouraging the states to also spend on capex, that 50-year loan issue. This has been very, you will see a lot of crowding in a private sector investment happening.
If you see what is the composition of expenditure, so it is more towards investment. Once investment, economists to understand better in terms of jargon, because the multiplier is higher, because investment will create jobs, it will create industrial activity. So it is good for growth.
Over 39,000 compliances have also been reduced and over 3,400 legal provisions decriminalized to enhance ease of doing business. Till now, multiple identities have been needed for conducting business. Now, for all establishments that are required to have a permanent account number, that ID will be used as a common identifier for all digital systems.
The two big impacts is one, just ease of doing business. But the second advantage, and which is sort of a hidden utility, is this can actually do for corporates and small businesses what Aadhaar has done for individuals. It can create a real resource of data which can be utilized to give access not just to public goods but also private goods and services such as financial services.
Sitharaman also proposed raising the income limit for presumptive taxation for micro enterprises from 2 crore rupees to 3 crore. Among other measures, she also announced a revamped credit guarantee scheme for MSMEs with effect from 1st of April this year.
On the MSMEs, extending the credit guarantee scheme is a great support to the MSME sector. As we all know that this is MSME is the backbone of Indian economy.
Keeping with expectations, direct tax SOPs for individuals have also been announced.
We will wait for the details. But if you look at a figure of about 35,000 crores net being what the government is foregoing in terms of direct taxes, I think that's a very, very noticeable boost to consumption in the country.
India is a consumption-led economy. To have the income tax, changes that has been made is just a great, not a morale booster for every section of the society. It's an acknowledgement that yes, we were living in a high tax regime. We need to moderate it, and I think that will really boost consumption demand.
From an outlay of almost 20,000 crore rupees for the green hydrogen mission to giving mobile components and TV parts manufacturing a fillip, other measures concerning India Inc. were also announced in the budget speech. So, what did experts and industry insiders have to say about the budget's impact on India Inc.?
It sticks to a path of fiscal consolidation while investing in the green economy and the energy transition. It's also focused on regulatory governance, improving the processes for regulation making, and bank governance.
11.8 lakh crores of government borrowing from markets, I think is a very manageable figure which will not stress the banking system or crowd out private sector borrowers. I think that's important to keep in mind.
On the tourism sector, I saw a great focus. And this is picking up from the vision of Honorable Prime Minister Modi. More focus on domestic as well as, of course, foreign tourists coming into India. But a direct benefit transfer for 47 lakh youth to be skilled in the tourism sector, I think is a great initiative.
There may have been some missed opportunities too.
Custom duty rationalization on some of the input products will also help them from an overall perspective. One area which they could have addressed is extending the date for manufacturing companies to start production for a lower tax rate of that 15% from March 31, 2024 to maybe a later date.
Focusing on AI and 5G labs, green growth, these are positives. Of course, there's always dil mange more. Could we have done more? Of course, I would say simplifying some of the things from a tax perspective, things on manufacturing could have been improved, linked to the PLI scheme, etc.
India Inc.'s initial reaction to the budget announcements has been overwhelmingly positive. However, the real measure of the budget's success will be if a new private sector capital formation cycle truly kicks off in FY24.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.